Have you ever wondered what financial freedom actually looks like when you break free from geographical boundaries? My guest today manages $100 million across 109 countries and has built a business helping others create wealth without borders. But here's what fascinates me. He started at 18. He was furious about how complicated investing was made to seem. That frustration, it became his superpower. Today, we're diving into how global wealth management isn't just about money. It's about creating the ultimate freedom architecture for your life. Hey everyone, welcome to the Jamilia Grier Show, where entrepreneurship meets self-discovery through a global lens. I'm your host, Jamilia Grier, and this show exists for those of you who know there's more to life than the path you're currently on, whether that's a job that drains your soul, or financial stress that keeps you up at night, or simply that nagging feeling that you're meant for something bigger. Today, we're exploring how financial strategies across borders can become your pathway, not just to wealth, but to profound personal freedom. My guest embodies what I call the freedom architecture, building systems that support location and financial independence. His name is Adam Fayed, and he's a financial strategist who's built an empire helping high net worth individuals and expats manage their wealth around the world. Adam, welcome to the show.
Well, thanks for having me, Jamilia. It's a pleasure.
Adam, what really drew me to your story was the fact that you got into all of this financial strategy business when you became frustrated and irritated with the process. I think you described it as a frustration with why is it so complicated when people want to build wealth and they want to invest, and it's just made so complicated for the everyday person. And you decided to build a business helping people do that. I thought it was fascinating that you started out so young. You started out at 18 with your first investment account. Can you describe that experience to us?
Yeah, so when I was 18, obviously I didn't have large amounts of money to invest, but I was curious about investing. I was studying finance at that time. And so, it's become much more common these days, right, for people to start investing early, just with small amounts of money because of the growth of online trading apps and so on. But what I did find is, obviously because of compliance and legal stuff, the processes involved are very difficult in certain cases. And since I've got into the industry, I have kind of found that often compliance and regulation are used to blame, lack of good processes and so on. So I'll give you an example of that. Before COVID-19, most investment providers would say, we can't accept DocuSign or that kind of thing. We need it to be like pen and paper. And when you would challenge them, they would say, well, actually, it's compliance and regulation. But then if you ask, well, what regulation, what compliance? Then what was interesting is as soon as COVID happened, suddenly they were flexible about their processes, right? So I'm not saying compliance and regulation in certain cases isn't important. There needs to be basic checks so that organizations aren't, laundering money for criminals and so on. But I wanted to start a financial organization whereby we made it as easy as possible for people to actually do what they want to do, because it's the path of least resistance ultimately, right? Because if you can do it in 2 steps, why do it in 5 steps? So basically, we've created a financial organization where with some of our providers, we can actually open up accounts usually within 24 to 48 hours. So that was one of the reasons I did that, is I did get frustrated by how unnecessarily bureaucratic a lot of the processes were in the finance industry. Although in fairness, in many industries, I guess bureaucracy and processes are often used as an excuse to delay the consumer.
Yeah, I've heard that a lot. And then, I myself also face that challenge as a US citizen that's taxed everywhere in the world. No matter where you go, no matter what you do, you're going to face that US tax. It becomes so onerous. And then when you go to these banks, to these financial institutions as an American, and you want to put your money there, you're hit with so much paperwork, which feels like almost a block, right? It feels as though they almost like discrimination, but they want your money, but they don't want to get in trouble, of course, with the US tax laws. And so they need to do their due diligence on that end. And it's interesting to me that, you started out with this frustration and you went to help others. As you're doing that and as you're building your business since the age of 18 till now, what kind of transformation did you go through? We always talk about entrepreneurship as a journey, as this self-discovery journey in which we find out more about ourselves. How did the young Adam change as you built this business?
When I went abroad to begin with, I actually went abroad one day after graduation. So I thought it was a good time to go abroad because the UK situation wasn't fantastic at the time. And my best friend was living abroad at the time as well. So I just decided to go abroad. And then when I went into the financial industry, to begin with, I did work with one or two other companies, but then I started my own business. In terms of the challenges, I would say in the early days, actually, banking was a challenge. So anyone who's from the UK would have known recently there's been some scandals involving some high-profile political figures like Nigel Farage, who had his bank account frozen. It's quite common for people who are politically exposed people, PEPs, to have their bank accounts frozen. But what a lot of people haven't realized until recently is any companies involved in activities that could be facilitating money laundering, whether that's casinos, whether that's financial services, whether that's companies that deal a lot in cash, a lot of banks don't want to actually deal with them, especially cross-border. So when I started my business, it was hard to get bank accounts, and it was hard, believe it or not, to maintain those bank accounts because a lot of the banks and companies, they wanted the revenue level to be above a certain monetary figure to justify keeping the bank accounts. Now, that hasn't been an issue now for about 4.5 years or so. But I would say before that, that was actually a major issue. I think, though, having said that, COVID-19 probably has made all those things easier because now more people are doing things cross-border. It's not an unusual situation now to have people who, live in, I don't know, Singapore or Dubai or wherever they're based and then have clients all around the world, including in the financial industry and beyond. So that's probably helped. But yeah, banking was a major hurdle, I would say, which kind of links to what we were talking about before, though, and that's the compliance and regulation is used to kind of justify anything in many cases. So you can have a situation where certain people, like politically exposed people or whoever they are, or companies who are dealing a lot in cash, get debanked. And, the justification is that it's compliance and regulation, and then they're just left without a bank account. So these kind of things do happen. I would say that was a major thing. Also, even though people who know me or know of me know that COVID-19 was actually, at least business-wise, a good time for our business because we were online and remote, which means that more people came to our business. Obviously, when it comes to what we're doing, whenever there's any crisis, at the start of the crisis, people can panic, right? So COVID-19, the first few weeks, the first month or so, people were panicking a bit. Just like this week, right, with Trump's tariffs going on and off, and then 2022, Ukraine and Russia. So even though our business model is pretty robust in terms of it's not like a digital marketing company or something like that, whereby, people often stop advertising as soon as there's a crisis on the horizon. With our model, it's true that people still want to invest, and a lot of people see the value of investing when markets have gone down. But by the same token, you can imagine like some of the crises we've had in the last, say, 6 or 7 years, how busy we have been during those periods where people have panicked. So the early part of COVID was just a pretty crazy time for us, even though 2022 was a good year in the end for us.
You mentioned Trump's tariffs, and I'd be remiss if we didn't talk about this because it's all over the news, but it's impacting so many people in different ways. I was actually on a live stream last night and people were asking, is this going to, who is going to be impacted by this? And I think it's important that people understand that the US stock market, when it is volatile, the way that it has been for the past week or so, it doesn't just impact Americans. It impacts the entire world's economy. Any large corporations that hold their portfolio has US stocks, US bonds, any sort of US assets that are in there, they are going to be feeling the pinch. And so, when you think about this chaos, you mentioned COVID, right? And COVID was a time of opportunity. It does also seem as though now we're hitting another chaotic moment in history where we've got instability in one of the world's largest economies that is creating all of these waves across borders. Have you seen the impact of this in the work that you do?
Yes, I mean, fortunately, a lot of the people who know us, not just clients, but followers as well, know that my advice is to stay calm, just be long term. And so most people know that that's a good thing to do, right? A lot of people as well see it as a good buying opportunity. I mean, obviously, markets before we spoke overnight, they were up by between 8 and 12%, I think. So they have regained some of their, losses. But it is a very volatile time, right? Because the unpredictability of the policy coming from the US is something that a lot of people are struggling to grapple with. Even a few days ago, I was speaking to a friend and I was saying, yeah, but with Trump, you could just go back on his tariffs anytime. And then, lo and behold, I wake up today and he's kind of gone back on a lot of these things, although he's doubled down on China. Now, I do understand why the US wants to do certain things, because I lived in China for 4.5 years. I've visited China over 60 times apart from those 4.5 years. I do understand that when it comes to China, sometimes they have used unfair trade practices. What's worrying people, I think, is more the unpredictability of this and where it might go kind of medium term. Nobody can predict that for certain. What we do know is long term, if people invest in the stock market, it tends to work out. It always has done historically if you look at the S&P long term. But what is interesting about what's happening as well is, there's a lot of speculation that, Trump's going to reduce taxes again for Americans, right? And if that happens, you could actually see a situation where sometime this year stocks are skyrocketing again, right? So I think it's that unpredictability. It's always there. It always will be there, right? There's always unpredictability in the world, but with the current US administration, obviously it's at a high, this kind of unpredictability, because things are changing on an hourly or daily basis right now.
It really is. It's so unpredictable. And we like to talk a lot about this arbitrage mindset where you can find opportunities and gaps in information and sort of these chaotic times. And it seems as though, a lot of people in this moment are blind to some of those opportunities. I mean, you mentioned that, you tell people to kind of stay calm. Some people use it as a perfect opportunity to buy. I also see that there's an opportunity to start a business or maybe reinvent yourself and to take more of a holistic look at what you've been doing previously. And I think that aligns a lot with the work that you do. I mean, when you work with people, do you often kind of talk about this location independent lifestyle and how to set up your assets and your life so that you have more freedom in terms of where you go and what you do?
Yes, we do have a lot of clients like that. So we do it if it's kind of requested from us. So yeah, I mean, there's a lot of opportunities, obviously, to live that kind of lifestyle. Obviously, there's a lot of people, whether it's in Mexico, Costa Rica as well. Thailand has a lot of independent location people as well, I believe. There's a lot of opportunities there for people to actually sometimes reduce their taxes depending on their nationality and many things, or reduce their cost of living and live a more international lifestyle. So definitely there's opportunities out there. And ironically, when there's more chaos, there's more opportunities usually. However, people only see that in retrospect. So people now see that there are loads of opportunities during the early stages of COVID, but obviously at the time, most people were panicking, right? Same with 2008 and the global financial crisis. So the ironic thing is, if this whole volatility is just a short run thing, the opportunities probably won't be as great, right? Whereas if there is actually quite a big downturn and the global economy is affected for a year or two, that will affect many people negatively. There's no doubt about that. But by the same token, the opportunities will be much higher, almost for sure, because fewer people will be advertising if you're a business owner, which means ad costs will go down, as one example. If you're cash rich as a business, more people want to sell out to you at better prices. Investment prices will be down. and so on and so forth. So actually a downturn, there's so many opportunities out there for people in the expat.
And so many people are wired that when they hear the term downturn, immediately fear is invoked in their system, right? They operate on this fear mindset. But what you're saying is like, no, in the downturn, in the chaos, that's your opportunity to really thrive and to kind of understand what are the opportunities that are there. And I think a lot of people that are watching now, what they probably want to know is, what do I do? You know, if someone wants to start building wealth that transcends borders today, what's the first action step you'd advise them to take?
So the first thing is to decide probably where you want to base yourself or where you might want to base yourself. So for example, if you're in the US or the UK or Canada or wherever you're living, where might you want to base yourself? Having said that, if you want to stay in your home country, there's nothing wrong with wanting to diversify your assets, right? And maybe have another home or assets overseas. Obviously, you might not get the tax benefits if that's the case, because say if you're from the UK and you're living in the UK, you're not going to get the same tax benefits as if you offshore yourself and do that properly. So first of all, I would say decide if you want to stay in your country or not, then exit yourself properly, because when it comes to Canada, there's an exit tax on capital gains. And so when it comes to Canada and the UK and many countries, even though it's true, there's no American-style citizenship by taxation, you still have to exit yourself properly. Likewise, if you spend too much time back in your home country and have too many ties to your home country, you can still be a tax resident. So decide where you want to be. Do you want to completely cut ties to your home country? And then decide what kind of assets you want to go into. Having said that, as I mentioned, if you just want to stay in your home country, but you want to just diversify yourself, not necessarily for tax reasons, but you just want to diversify yourself across the world, there's nothing wrong with having like a second residency or having assets overseas, because ultimately you're just doing that to kind of, spread your risk essentially.
It's so funny listening to you talk about these, financial terms, and you've written extensively about finance online. I know that sometimes as a professional, it's tough to kind of get the language of what you're explaining down into a way that people can understand and really kind of try to like force yourself to articulate complex ideas in writing and, really get people to connect with that. What have you found actually works that people can really connect with when you're explaining financial strategies, offshoring yourself, as you've said, and diversifying? How do you get people to understand what these things actually mean?
Well, it's interesting. Maybe some people don't connect, obviously, with everything I say. So that's fair enough. But what I have found is, in general, people can relate more to personal stories and analogies as well. So, anything about my personal story or personal stories of people I know is quite an important thing, I think, because then it goes from like something which is very abstract to something that's very real. So, for example, a few days ago, I was speaking about how, it's natural for people to feel more comfortable with something which is more familiar to them, right? So I was speaking about how I personally met a lot of Lebanese or Egyptians or people in emerging markets, let's say, who, believe it or not, assumed that, having money in the bank in their local country or in real estate was the safest option because it just felt familiar, right? You can touch the real estate, you can put the money in the bank and actually go to the branch and so on and so forth. And even expats, right? Expats in emerging markets. I was based in Cambodia for 1 year or so. Again, many expats who are long-term feel more comfortable with being close to their money. But often what happens is when something goes wrong, a lot of people feel like, well, those guys were idiots, right? Those wealthy people or people who are middle class, why didn't they put their money into something which is more stable or in a more stable country? But people can say that in retrospect, but then like it's only once something actually happens that they realize the importance of this. Likewise, COVID, right? A lot of people said, well, people who were restaurant owners or bar owners or in the face-to-face economy, of course they should have taken out some kind of insurance or had some money outside the business in case something like a pandemic happened, because it happens every 100 years or so. But again, people don't think about it until it happens. So, and I think with this whole tariff situation as well, we'll realize who hasn't kind of focused on their risks sufficiently as a business owner. So those businesses that go out of business and then people actually become poorer, Often that's because of a lack of planning. So I think one thing that is interesting about what I do and anyone in the financial industry does is one of the most important things is stopping people from becoming poor, not just helping them get rich. And obviously it depends on people's stage in life. If somebody's very young and they just want to build their wealth and they want to do all kinds of risky stuff, leverage or whatever, then you could say fair enough, because if they lose it all, then so what, right? But if you've got like a 50 or 55-year-old person who is coming towards the end of their working life because they've just had a health scare, someone like that, right, preserving wealth and actually making sure that they and their children and grandchildren, if they want multi-generational wealth, don't become poor, is actually very important. So I think all those things are important, but it is difficult. But I think to answer your question in a very long-winded way, storytelling, real stories from my own background and people I know is quite powerful, especially during moments like this where there is a lot of instability out there.
That's for sure. Adam, I can't help but think about the people who may be watching who may think, well, you're from UK and you're from US and you guys can talk about wealth, you can talk about money, you guys have money, etc. But we've seen this trend of people who are coming from not as developed countries who are accumulating and amassing an enormous amount of wealth. And I wanted to know if you could talk a little bit about some of the discrete things that people can do, the habits that they can have when it comes to accumulating wealth. And of course, it's, if you're making, 300,000 a year, it's easy to talk about that. But as I understand, there's also some habits and some things that people can do even when they don't have a lot of wealth to kind of get them into the right mindset. Because a lot of what you're talking about is mindset. We talk about people not being comfortable with, diversifying assets or fear and the chaotic times. What are these things that people can do as baby steps?
Well, essentially, there's two main ways to get wealthy, unless you include luck, which is a third way. And we shouldn't really focus on luck too much, right? Because ultimately you can't really rely on, a huge inheritance that you didn't expect and things like that. So the two main ways are getting rich slowly through investing in, say, the stock market and other assets. So let's say someone's got on average even $200 or $300 a month they can invest for the long term, and maybe they then increase it as they get older, and maybe if they get an unexpected small bonus or something, put that in. Often that is enough to ensure that person can actually get wealthy slowly because of the power of compounding. So, for example, Warren Buffett is one of the richest people in the world. And obviously, most people are aiming to be the next Warren Buffett. But what a lot of people don't know about Buffett is he only made his first billion at the age, I think it was 53, 54, 55, something like that, in his early to mid 50s, had his first billion. And now he's got over 100 billion, despite the fact that A, his average returns have gone down, and B, he's given a lot of money to charity. So you might say, how's that possible? Well, it's just because he's lived for a very long time, right? And it's just compounded over time. And likewise, if we talk about a more down-to-earth example, there are many examples of people, for example, who have died with like $7, $8, $9, $10 million estates. And they were like cleaners and things like this. And you might say, well, how's that possible? Well, oftentimes they just bought assets like decades ago, and they just held for the very long term. And then over time, it just kind of added to their wealth. So if you Google, for example, secretary in the US who became a multimillionaire, secret millionaire, or cleaner in the US, I think it's called a janitor, right, in the US who's worth 7 million or whatever, you'll see the stories. I've forgotten their names, but someone who just buys assets at a young age and they start small, it's not that uncommon to actually become wealthy over time. So in the UK as well, I'm sure it's the same in the US, you have a lot of these old widows who basically they have multi-million-dollar or pound houses, and they just sell them and live well. And all they did is they bought the assets a long time ago. So that's one way. The second way is entrepreneurship. And entrepreneurship, it's not so much a get-rich-quick scheme, but if it goes well, of course, then you're going to make money more quickly than the get-rich-slow approach. But you've also got more risk, right? Because it depends on your health. There are so many things that go wrong. We spoke earlier in the conversation about even bank accounts, the regulatory environment changing. But with entrepreneurship, it's not a linear situation. You might have a situation where you're going flat for years and then suddenly you go up very quickly. Like I think there was a famous quote, which said it took me 10 years to become an overnight success. And that's the thing of entrepreneurship, right? You might have like 5, 6, 7, 8 years, 10 years where it seems like you're not doing that well, and then suddenly you just take off. Those are the main ways. Now, of course, though, you can actually take more risk of investing if you want to. For example, you can leverage, which is taking out debt when the markets are down. Most people, if they have a margin account, they can actually take out debt on their investments. Most people probably don't have the temperament to do that easily because you need to have, bravery in those situations, but you can do those kind of things. But what's interesting is, in terms of your question as well, you mentioned people in emerging markets. And what's interesting is people who actually live in emerging markets, they do have certain advantages, believe it or not, in terms of, yes, it might not be as easy to invest $500 a month or $1,000 a month from being like a school teacher or an accountant in those kind of markets. But when a country is developing fast, actually, it's easier to make money in entrepreneurship. Like when I visited China in 2007 for the first time, I visited Shenzhen, which was the fastest growing city in the history of the world from, I think, 1990 until 2015. It was clear it was such a great place to make money. And likewise, what I see at the moment is in those markets like the Nigerias and certain other places, nothing's ever easy. Otherwise, everyone would do it, but it's much easier in certain cases to make more money because there's less competition. Things are growing really, really fast as well, which compounds. So actually, people who are living in emerging markets, whether they're locals or expats, they do have opportunities as well as negatives as well.
You know, we had Jim Rogers on the show about a month or so ago. And Jim Rogers, of course, author of Investment Biker. He's co-founder of the Quantum Fund, world-renowned investor. And he talks about this idea that when other people are not entering certain places, when other people are fearful, that's your sign to kind of go in and explore. And then kind of like we mentioned, find out what the opportunities are. And you mentioned Nigeria. Now so Black American, had never had visited the continent, have never been to any country in Africa. But since coming to Dubai and with my business, ByteBow, where we focus on tech and tech ed, Web3 stuff as well, I realized that there's so much opportunity in Nigeria, particularly even for things like tech education. We're launching a program now called the Campus Ambassadors, where we're looking to educate students on campus about blockchain and cryptocurrency. And honestly, Adam, the demand is huge. It's like an ocean of opportunity. Most people, and of course I'm saying it on the show, of course people won't listen, but most people look at that and say, oh, it's not, it's not stable. It's not the market, it's not the place. Well, people said the same thing about Dubai decades ago, right? And said the same thing about Saudi decades ago. And so look where they are now. And I think you're absolutely right. It's these places, these emerging and developing markets where you can apply these entrepreneurial skills and have a huge sort of a multiplier effect in terms of growth. And people should certainly look to that. And I think I'm in the second bucket. You mentioned the slow savings. I worked as a lawyer for 15 years, tried that. And I was like, this is okay. I guess I'll be fine by time of retirement. I'll be good. But I'll be 65. I don't want to enjoy it at 65. Things now, and I think a lot of people are starting to look at that and say like, well, I mentioned 65 because in the US, our 401k, you can, access that after you're 65. I think a lot of people are starting to think like, wait a minute, you want me to work 9 to 5 for X amount of years, and then at 65, I can enjoy everything I've been working hard. I think people are starting to think of ways to be more entrepreneurial now, as you mentioned. But it's really fascinating that you mentioned these two different paths, and people are starting to look to what works best for them.
Yeah, definitely. It's interesting what you said as well about, not everyone wanting to kind of work until 65 as well, because what's interesting is if you move abroad, semi-retirement or early retirement might be easier. Cost of living is lower. There could be a lot of people out there who are, for example, asset rich, not, even in a large way, like they might not have multiple millions, but they might have enough, who might be in their 40s, for example. And for them, if they were able to retire tomorrow or semi-retire tomorrow or next year, they might actually like that if possible. It's not all about, for everyone, acquiring as many assets as possible. For some people, semi-retiring in their 40s, for example, 30s or 50s or whatever, and getting an income from their investment, retiring early or semi-retiring early might work, in a better way. So, for example, if you're living in the US or the UK and you have $500,000 or $1 million, actually, believe it or not, it's very unlikely you can retire on that now, unless you kind of live in a very, very, very cheap area and do things like huge sacrifices, right? Whereas in comparison, if you're based in, I don't know, Costa Rica or certain parts of Mexico, Southeast Asia and beyond, with the right financial advice or the right investments, you could retire on that, depending on your lifestyle and so on. So I think that's another thing about moving abroad. For some people, retiring early or semi-retiring, the maths works much better than it does, say, if you're living in, say, the US or the UK.
Super interesting. And it really is all about what you want it to be. You have to I always talk about like doing that inner work to think like, okay, do I really want to be, taking trips every week, to a different country for business, even if I am an entrepreneur? Or would I rather spend that time with my family and maybe have less income coming in, but have a slower pace of life? And I think people are really starting to look inward to think about what is it that they want their life to be like. And then we talked before the show about Dubai. We're both based in Dubai and people who are moving here. And money is like such a topic in Dubai. Everybody wants to know, like, what are you driving, where you live, what, focus on the flashy stuff. But I think underneath all of that, there has to be this discussion about these financial strategies and what you should be looking to invest in if you live in Dubai. And of course, it's not financial advice, but where are some of the industries or the things that you think people should be looking at if they were to come to Dubai, build a business? What should they be looking to invest in?
It does depend on their individual situation. So, for example, in my situation, I started a completely online and remote business pre-COVID. So for me, being in a country where the time zone is good is a major benefit. And likewise, I'm sure in, say, Saudi, Dubai, countries in the Middle East, the time zone is one reason why many online business owners come to this particular region, as an example. Ditto somewhere like Singapore. A lot of people who have clients in, say, the Asia Pacific, they use Singapore as a hub. So obviously one option when it comes to the likes of Dubai, or for that matter, Singapore as well, is to use it as a hub. And that could mean just you're doing an online business, or for that matter, as you say, maybe you're based in Dubai or Saudi, but you're focusing on the African market. So there's a lot of people who use Dubai as a market into what's called the EMEA region, for people who aren't familiar with that, expression, Europe and the Middle East and so on, in the same way that people use Singapore for the Asia Pacific. But in terms of if people want to invest locally in any business, I would personally say, this is just my opinion, as you say, it's not financial advice, but if you're in a place which is like a hub-focused place, like the UAE, Singapore, Jersey, Guernsey, Isle of Man, those kind of places, ultimately you want to focus probably on businesses that are taking advantage of that status, and they're not just focusing on the local market. Because if you think about it, how many people live in these places? I think the maximum population is 10, 12 million in any of the places I just mentioned. So therefore, if you've got a consumer business, for example, and all their clients are local, even if most people are doing well locally, it's not going to be a big business probably, right? So I would actually focus on, you mentioned, for example, education technology into the African market. If you've got an entrepreneur based in, say, Dubai or Saudi or whatever, who is focusing on the Middle East, but also Africa and beyond, and they're selling into those markets, I would focus on those kind of businesses if possible. But beyond that, what I would say is for expats based anywhere in the world, this includes in the countries we've discussed, I still think being globally diversified is really important when it comes to a portion of your assets. Because what is very easy is it's easy to have what's called familiarity bias. So we spoke before about how people wrongly felt like keeping their money in the bank in, I don't know, Lebanon or Cambodia was the safest thing to do because it's close to them. Always remember that local options aren't always actually necessarily the cheapest or the best or the most efficient options. One of my favorite quotes, actually, it's not often that I would quote a football manager to discuss investments, but the former Arsenal manager, Arsene Wenger, who is considered a little bit of an intellectual, he once said, everyone thinks they have the most beautiful wife at home. And I think it's very easy for people to think I can see things with my own eyes or whatever. So I don't know, Dubai's got the best investments, or Nigeria has the best investments, or I was just in Singapore because I'm buying into a business in Singapore, and everyone's saying, oh, there's so many rich Chinese coming in now because of the situation in China. So when you travel around the world, you realize that people always focus on the local options. But if you're a bit more broad and you see the opportunities globally, that's always a good thing no matter where you're based in the world.
Well, two things. First of all, my husband does have the best wife at home. Secondly, I think you're absolutely right. I mean, people do get that comfort feeling, and just like everything else, you've got to diversify. But I do see this intersection between travel and these, cultural experiences, understanding different parts of the world, and entrepreneurship. And, you have to learn. You have to learn if you're going to grow. You cannot be stagnant. You cannot stick to one market. You cannot say, because I moved here, I'm just going to, invest everything here. You have to keep learning and growing. And speaking of learning, one thing I wanted to ask you about was AI and technology. So we do see a lot of trends with AI changing not just how people invest, but where they're investing. Has it impacted the way that you work with clients? Has it impacted the strategies and the way that you advise at all?
Well, some of the fund houses, the entities that I own use, some of them are using algorithms or AI to have predictive models. Right now, it's working better with those kind of hedge fund-like assets. Those are assets that typically can buy and sell, so go long and short, which is the more professional expression used in the investment world. So it is having an effect for sure when it comes to those kind of funds, right? Because if you look at the traditional, say, I don't know, S&P 500 ETF or index fund, it's just buying everything, it's holding everything, which is great in the long term. But obviously right now, a lot of people are looking for alternatives to government bonds because debt around the world is massive, right? So holding treasuries, holding government bonds is seen as riskier than before. So a lot of people are looking at those assets like uncorrelated assets, whether that's hedge funds, whether that's private equity, private credit, and so on. And I think AI can really help them in those strategies in terms of the algorithm. And also, this is a key thing, stripping out a lot of emotion as well, because ultimately people who are investment professionals, they still have their own emotions as well. And AI can help with that, right? In terms of balancing risk and not having as much emotion. It's going to have other effects as well in terms of potentially how advisors communicate with clients. But we're at the early stages still, I would say, of this whole thing, right? So I think in the future, in the next 2, 3, 5 years, it's going to have a much bigger effect on what happens in our industry and many industries. I also think when it comes to things like lead generation, it's going to have a big effect, right? When it comes to any industry. So for example, the AI, if you've got databases or whatever, having those communications with potential clients, it's probably actually going to be really good, especially the first stages of the interaction, of getting people a bit warmed up. So it's quite an exciting time, but obviously like all exciting times, there are winners and losers, and people naturally aren't always comfortable with change and volatility. And I think there's a lot of changes coming in the world in the next decade.
Adam, from the standpoint of someone who has started their own business, and then also you advise high net worth individuals, you probably work with a number of entrepreneurs. What would you say to someone who's watching that maybe is considering moving abroad and starting a business or taking on some of these global strategies that we talked about?
Yeah, I mean, the first thing I would say is probably look at your existing model, right? Because let's say if you've got, I don't know, a YouTube channel or something which is very portable, maybe that easiest way for a lot of people to start is actually from your home country already be globally diversified in terms of your client base, because that way it becomes easier to move abroad. So for example, if you're, I don't know, a UK entrepreneur who has sold courses online, or you've got your own YouTube channel or whatever it is, it's very easy to move your business. Obviously, you'd have to take formal tax advice, ideally tax or legal advice, and then decide where to incorporate. But that would be the first thing. If you can make your business as portable as possible, it's a good idea, because it always gives you that get out of jail free card, in terms of it always gives you the opportunity to more easily move abroad. That's one thing. And then beyond that, if you don't have that kind of business where you can easily move abroad, just decide what you want to do. So some people assume that like all their clients will leave them because they're moving location, but I think that's becoming less the case now. And also often you don't necessarily even need to change your structure. So for example, for Americans, and again, this is obviously not tax or legal advice, because I'm not a tax or legal person, but from what I've understood, if you have an LLC company as an American and you move abroad, provided that the people or you aren't actually doing the tasks in America, then basically an LLC is a very tax efficient structure abroad. So for example, if you're an American who lives in the Cayman Islands or Dubai, for example, or another very, very low tax jurisdiction, even if your clients are based in America, provided you aren't conducting the business physically in America, the US government will actually not apply a tax to you for those transactions. Now, obviously, the devil's in detail, but the point I'm making is you shouldn't necessarily think that you have to change your structure. I would say for a British person or someone from most countries, often offshoring yourself and your assets and your business is the best way to go. But for Americans, because of the taxation system, citizenship by taxation, and also the way that the US government seemingly wants to protect, let's say, commerce, it seems like for many Americans, you have to think a bit more carefully about what to offshore and what not to offshore, if that makes sense. But obviously for Americans as well, sooner or later, and this includes green card holders, the whole citizenship thing becomes a bit more of an issue. Obviously, giving up your citizenship is a massive step. But for those people who weren't born in America, who don't necessarily have the same, let's say, allegiance, probably looking at that issue makes sense if you're high net worth. So I believe the former co-founder of Facebook, Suarez, the Brazilian guy who founded Facebook with Mark Zuckerberg, he gave up his US citizenship. I think Tina Turner did as well, and there's about 5,000 or 6,000 Americans who do it yearly, but it's a big step. But if you weren't born in America and you came to America when you were 10, 15, 20 or so, and then you've made a lot of money and now you're going to go back offshore, I would seriously look at the whole citizenship thing as well, because it might make your life easier. But obviously, as I said, that's a big step as well. So the key thing is, I would say, look at your structure. That's really important for your wealth and your business. Because another thing is, for British people now as well, now that the inheritance tax rules have changed, it seems like if you're a long-term British non-resident taxpayer and you offshore your assets, now you don't need to pay inheritance tax. Whereas before, for British people, you did. But if you leave assets in the UK, even though you don't have to pay income tax on a lot of income, like employment income if you're living abroad, you could still face that inheritance tax liability. So you could have a situation where you've got British people overseas who have lived overseas for 50 years, but they've kept property in the UK, and then when they die, their beneficiaries face a huge inheritance tax bill, right? So I think the bottom line is, when it's for your business and individually, look at your structure and what works for you. And not just in terms of tax, also convenience. You have to ask yourself, do you really want a situation where you're getting calls from, I don't know, a real estate agent saying, oh, we've got a problem with your tenant today, or something like that. So when it comes to your assets and your structure, also ask yourself, how much hassle do you want from that structure as well?
Yeah, and I'm certainly the one that wants the least amount of hassle when it comes to those things. Adam, I'd like to put you through a rapid fire question sequence here. I love to do this, just to ask questions, and then you give me the first thing that comes to your mind, any unfiltered thought. You up for it?
Sounds good. I'll keep my answers succinct then.
Okay. What is the most underrated financial advice?
Focus on return on investment adjusted for time and convenience and hassle.
The book that transformed your thinking about wealth is?
You're putting me on the spot here, aren't you? The Millionaire Next Door is something that comes to mind.
The personal habit that's most contributed to your success is?
I would say risk taking, in particular, understanding that I think it was Jeff Bezos who said this. Most of the big returns come from betting against conventional wisdom. However, conventional wisdom is usually right in most circumstances, but it's not always right. And so another way of putting this is doing normal things will lead to normal results. Doing abnormal things will lead to abnormal results.
The moment you felt truly free for the first time was?
Financially free, I would say probably 3 or 4 years ago or so, when I realized that my personal assets and also recurrent income from my business was enough, even if there was an absolutely massive downturn that lasted for years. I would say that was probably the moment I felt free.
If you could teleport to any place in the world right now, where would it be?
Anywhere in the world? That's a good question. I would say somewhere that not many people have been. Probably either somewhere like Antarctica, although I don't like the cold, but I think it would be good to go there. But actually, now I think about it as well, somewhere like Tanzania, because I went on a safari just over a year ago. It was absolutely incredible, to Kenya and Uganda. But I would say the Serengeti, maybe in Tanzania, would be one place that would come to mind as well.
That sounds amazing. That's on my list too. Adam, where can our viewers connect with you and learn more about your work and what it is that you do?
Yeah, so you can go on adamfayed.com, which is my main website. You can also go on LinkedIn as well, type in my name. It'd be great if you let me know you came from this channel, and those would be the two main ways you can connect with me.
Adam, thank you so much for being on the Jamilia Grier Show. It's been an amazing conversation.
Thanks for having me.
And for those of you that are watching, if today's conversation sparks something in you, remember this: the journey to financial freedom isn't just about money. It's about discovering who you become in the process. As Adam has showed us, sometimes that is what makes the difference. Take care, everybody. Hey guys, thank you so much for tuning in and listening to today's episode. You know, I appreciate when you guys tune in and the time that you take to listen to the show and support us. And I have one thing that I'd love for you to do that would really help us out, which is rate the show. If you've enjoyed it, make sure you rate it. You can do it on whatever platform you're listening on. That would do wonders for us. And if you really want to be a super fan and really support the show, there's a link below that you can support us and donate a small monthly contribution, which allows us to continue to create great content for you. Thanks so much again. Appreciate you, and see you next time.